Hi guys, May the 31st after the market closed, and we're looking at a chart of SPX here, and today is the last video of the week and of the month. We will start next month after June 1st, which is tomorrow, and the biggest report, unemployment jobs report, is due tomorrow. And in that light, what I've done here is I put a 20-day 30-minute chart here on SPX, and you can see I have drawn new lines here, which is basically this trend is emerging. It wasn't apparent to us. We were thinking that this thing is going into a bear flag and going up here, but it just did not, and made a bottom here at today at 1300 and bounced right back here, which puts this trend in a sideways motion. The stock market now have bottomed here and is now in a trading range between 1398 to 1335, and this range is just going to continue till it forms a decent base, or it may even break down from here. But it hasn't, because you should look at it one, two, and the third time today it failed to go below the 1295, and it did not undercut that previous low either. So it was supported here very heavily, and the market bounced back here. A lot of factors are creating a problem here. The jobs data, number one, is recovering, losing momentum. Private payroll picked up only slightly in May, and claims from jobless benefits rose last week, suggesting that the U.S. market recovery was losing steam after a strong performance. The market is just taking into account private employers only added 133,000 jobs in May. Payrolls processed at ADP reported. Now, this is not the non-farm report, which includes government employment tomorrow, which is coming in. And then the GDP was also revised from 2.2 growth in the first quarter to down to 1.91. I don't know why they don't get the number right in the first place, because that would have, these revisions always come here after a month or two, and that is also very disturbing to see that. So all these things, number one, the payroll unemployment claims increased to 383, which is slightly higher. Then the ADP report came in 133, which is not good, lackluster. And then the GDP was revised. The trifecta of that market killed it, and then towards the close it barely tried to manage, and it still ended up the day at thing. This is the same scenario here. Let's look at RUT. We haven't drawn the lines on RUT. Let's take a look at it again. No, it did not take it. Okay, we are going to RUT. Okay, sometimes I'm unable to type correctly and it does not take it, and the data stays there. Okay, let's see if it's loaded here. And the same kind of phenomena is happening here in RUT also, which I could do is I can always draw a trend line here, but it's going to take more time, but it's also going sideways instead of going down. You can see it has touched here, and then another third time it did not undercut the previous low, which is good. That means the market is going to try to go up higher sometime. When it will do that, we don't know. And the month of May was one of the worst months that we have seen in 2 years. So this is the worst that could happen here. You can take a look at it. RUT is just sitting above that 200-day moving average. It touched down there, bounced right back. And the Dow Jones, which we are going to look at it, the market direction, that gives you a good perspective what you can expect in the market. This is a bear flag we had initially thought, but it looks like it's not a bear flag anymore, and I'm going to delete it. It is a sideways here thing that you can see is a congestion pattern. A base is forming here. If it starts forming a little bit, few more days, we may see a breakout to the upside. Who knows? But these kind of reports keep coming in here, and they are just disturbing. PCLN, that stock has not done very well, and today it went down and made a new low, fresh new low for the year, 625, and it got pulled up here. If we get up to 650 and above that, we should be fine on it. Apple has done well, despite the fact this stock has moved quite a bit, and we're out of that position. We're above that, but it's going to hit that resistance right here at 50-day moving average, which is sitting here at 589 or 580. So that is all what we got here for today. The market remains treacherous as best.